Thanks, Arik, for the wonderful presentation, and thanks everybody for joining this session about virtual accounts. In this short session, I will kind of walk you through the history and the reason behind the existence of virtual accounts in the banking infrastructure, the gaps that we as Rapyd have identified while trying to integrating the capabilities of the virtual accounts into the Rapyd system. Some of the lessons we've learned from our market research that we've been running over the last couple of years with our customers, and then go through the Rapyd implementation of the virtual accounts and how this fits into some of the use cases that we're currently offering to some of you here in the hall today and for other customers. Basically, we're continuously running market research reports on a global scale, trying to understand within our customers, within the customers of our competition, and the general industry, what is most important for our customers? Where do we need to focus in building our products moving forward? One of the focus of the research we ran in 2022 together with Forrester was to understand the issues behind the growth and what is holding growth and enabling growth in cross-border commerce. And 59% of the respondents, and this actually came up as the second highest point in the research, is the ability to accept local payments. There is a very long list of enablers, and we've covered all of these when we've looked back into the product development. But I will focus on the ability to accept local payment methods. When looking at accepting local payment methods, it's not only the issue of the acceptance of the local payment method, it's how you handle these payments and what you do with the payment flow all the way down on managing your treasury. And a good way I like to describe this flow is looking back at the switchboard days of the telecom world, where the operators, which in my example are the corporate treasurers, have to manually move funds across borders, across different currencies, and manage these flows to manage the accounts receivables and match them with the account payables, and constantly run this cash flow management across the flows, the incoming flows and the outgoing flows. And this is an ongoing process, and if you need to run this across multiple territories, across multiple currencies, this becomes not only cumbersome and a very manual process, but it's also a very expensive process that requires you to move funds in through global networks, global banking networks, across multiple currencies. And usually what we see today is still big corporates collecting all their funds into their main account in their main office. So if you're a US company, you have a US bank account, and customers from all over the world are paying you into the US account. They pay higher fees for transferring these funds. There is FX cost because they use their local currencies, and you're receiving the funds in US dollars. Now you move back and you want to pay out these into your accounts payables, you need to again convert these fees into additional currencies and send them cross border. And this is a continuous process. Another report that we've been running in 21, deep diving into the treasury issues, or the issue of treasurers in this in managing these funds flow, we've identified that data accuracy came up higher than many other issues, even higher than optimizing working capital. So it's not only the management of the funds, it's also the availability to manage the data that is supported with the funds. And some of the other issues is the fact that if you are trying to optimize this global collection on your own, you're running into the complexity of setting up local entities in the different countries you operate. If you see global enterprises, they would, at the end of the day, have local entities in different regions. But still, if you have a local entity in the region, you still want to act locally in the different countries within the regions. So it doesn't matter if you're a small company and you only have one entity across the world, or you're a global enterprise with multiple entities in the world, you're still running into this issue of how do I enable my customers to pay locally in their local currency paying local fees. We all know that the cost of an ACH transaction in the US or a SEPA transaction in Europe is a few cents, while the cost of sending this transaction over SWIFT, is tens of dollars, anywhere from 50 to 60 to 100 and more dollars, just the cost of the transaction. These transactions are also very slow. It can take 2 to 3 to 4 to 5 business days for a SWIFT transaction to be executed and received in your bank account. We're also seeing issues with intermediary banks stopping and questioning some of these transactions. Your bank understands your business. The intermediary bank doesn't have visibility into your business, so we start seeing a lot of transactions being stopped and questioned, and this slows, again, the flow of funds. FX is a big thing and a big cost item when working with international transactions. And at the end of the day, we are seeing people paying 200, 300, 400 bips on FX on a transaction on top of the cost of the transaction in itself. And as your business grows into different markets, there is a constant pressure to optimize and open more and more local bank accounts, and that is becoming a big issue that is limiting the global performance of the business. So what we're seeing, and going back to my original or earlier example of the manual switchboard of having treasurers manually moving these funds and managing the movement of the funds and optimization, we're seeing this world is now moving into a more automated process of enabling the automated management of these funds flow, basically moving these transactions into the digital world, the digital transformation, moving them into the clouds. And this is where the virtual account infrastructure was invented by or brought up by the banks, kind of eliminating the need to maintain multiple physical bank accounts, improving the accuracy and allocating remittances, and optimizing working capital. So typically, what is a virtual account in essence? A virtual account is another layer on top of a physical bank account that enables you as a user of the bank account to associate an individual bank account, a unique bank account, with a transaction. So instead of having people paying into your bank account and now you have to reconcile into the source of the transaction, you can enable people paying you to use an infinite number of virtual account numbers that are all associated with your bank account. So there's less reconciliation issues, there is reduced cost, less headaches, and more agility into managing these transactions. Basically, if I need to summarize the advantages of the virtual accounts, they enable better reporting because you have visibility into each and every transaction. The source of every transaction. We'll see some examples later in my presentation. This leads to improved reconciliation, and at the end of the day, this all leads to better liquidity management on the accounts. But when we've started integrating virtual accounts into the Rapyd system and deploying this with our customers, we've started to identify the market gaps that still exist between the layer, the physical virtual layer that the banks have implemented with the virtual accounts, and the real value that can be brought into our customers when better optimized and better integrated into the Rapyd system. And this is where we've looked into some of the things like the low availability. Even today, the virtual accounts are still offered by a very small number of very large bank accounts to their very large customers. So if you're a small customer, your ability to access a virtual account system with your bank is very limited. It's also very regionalized. If you want to use virtual accounts in different regions, you still need to open a bank account with that bank and have access into the virtual account systems. If you want to use the virtual account system, you need to integrate. Some of these banks, these are not technology companies, or APIs are lacking. The technical support is lacking. So the actual ability of a merchant to get the most out of the virtual account system on the banking is very limited. And this is where the Rapyd virtual accounts kick in terms of the added value that we bring into the market. And it's very important at this point to understand that virtual accounts is not a standalone product. As Arik mentioned earlier, a virtual account as a part of the Rapyd platform. And what makes the difference when integrating the virtual accounts into the Rapyd infrastructure is the wallet architecture of the Rapyd system. One thing that we need to remember is the differentiation, the core differentiation, I would say, between the Rapyd system and most of the other systems and most of the other fintech providers in the market. And this is the difference between a transaction-based system and a wallet-based system. The core infrastructure of the Rapyd system is the wallet infrastructure, which is basically an infinite ledger system that our customers use for multiple applications, multiple users. And built on top of this ledger system, we've integrated the virtual accounts. So the virtual accounts on their own, are what they are. They're just virtual numbers. But when you now integrate these virtual accounts onto the Rapyd ledger system, you have a very powerful tool that enables you to manage transactions in multiple currencies, in multiple regions, all by the same API. So typically, now that we've integrated the virtual accounts into the Rapyd wallet, we have a ubiquity system that supports bank transfers on a global basis in all the 65 plus currencies that Rapyd supports. Because this is all tied up on the global ledger, it doesn't matter if you've used a virtual account in the Philippines and another virtual account in the US and you're now paying in Mexico. This is all combined onto your ledger system. You can immediately use these funds. If needed, you can immediately FX these funds and disperse the funds on the other side of the world. So there's no more a need to actually move funds across the world. These are all funneled into the Rapyd ledger system and then moved out as needed, either as accounts payables to your customers or into your corporate bank account at the end of the day. Another interesting feature of the virtual accounts is the ability to issue virtual accounts for single use. You can issue as many virtual accounts as you need, hundreds, thousands, or hundreds of thousands of virtual accounts, and associate these with a payment. And this will provide you the ability to reconcile a payment down to a specific payment transaction. On the other hand, in account payable use cases, we're mostly on the B2B transaction. Your paying customer would like to set up your bank account in their ERP system. So you would issue a virtual account number, and they will use this virtual account to process all their payments. So once the payments falls into your system, you immediately know who is the payer of this specific payer or specific transaction. And obviously, having this all connected into the Rapyd client portal provides you better customer experience to the different people that are using this system on your in your company. So basically, the way that Rapyd has integrated these virtual accounts on top of the Rapyd wallet system enables us to provide this global coverage for virtual accounts. We're currently supporting virtual accounts in 40 plus countries, and this is growing. On every quarter, we're adding, I would say, between 3 and 4 different countries. We're supporting 25 different currencies currently on the virtual accounts across the world. Virtual accounts are available, like many of the other Rapyd services, as a no-code option, and you will see some examples later on. So you don't need to actually integrate through the API. We have customers that have contracted with Rapyd and started immediately collecting funds with no code required or development required on their end. Virtual accounts, again, because the way that Rapyd built this abstraction layer between the banks and the complexity of the banking system and the virtual accounts, this is supported for small, medium enterprises. You don't need to be a global enterprise to have access into virtual accounts anymore. And lower cost is always, Rapyd is very competitive on its cost because we work on a global scale and access the global networks. Typically, I would like to go into some examples of how Rapyd customers use virtual accounts. Again, there's endless ways to do this, and we're seeing different customers building different use cases and different solutions on top of the Rapyd virtual account and wallet infrastructure. But these are just 3 examples that will, kind of highlight the capabilities of this system. And typically, I would say that people use it to extend the Rapyd Collect, mainly on the B2B side, enabling your customers to perform accounts payable using the virtual accounts. Other people use the virtual accounts to collect funds in order to disperse, so basically a top-up process. But instead of topping up one account in US dollars in the US, you can top it up with Mexican pesos in Mexico or any other local currency, or Singapore dollars in Singapore. So you can also do the top-up locally, and you can also save on the FX of the disperse side. And again, as I've already mentioned numerous times, the connection of the virtual account on the Rapyd wallet is one of the strongest selling capability. This is a typical example of a B2B collection. You're collecting from your customers on the accounts payable system. You can issue to your customers a local bank account and their local currency, so they can enable this transaction very quickly and very cost efficient on their end. The transaction comes in much faster, it's immediately reconciled, and the funds are immediately available for you to disperse or use them on the Rapyd network on a global basis. So you don't need to wait until these funds arrive in one account, move them to another account, FX them, and then use them to pay out. They're immediately available for you to use and immediately reconciled. One of the customers that has been using this capability, for example, is GoTrade. It's a trading platform, runs a global trading platform. And initially, before they integrated to Rapyd, their customers had to send their funds and top up their account with GoTrade to a single GoTrade bank account. Again, it took days between the minute that the customer wanted to initiate a trading transaction. He then had to go to the bank, send this money cross-border. It took them time to reconcile the transaction, and typically I think it took like 3 to 4 days until the money was available for trading. Enabling them with local virtual accounts in the different countries they operate made this into a very immediate process. You log into your bank account, you send the money, and within seconds or minutes, the funds are already in the GoTrade account, already reconciled because they were sent to a specific virtual account that was issued for this specific customer. So it's not only cost saving, it's also operational efficiency and customer experience. Moving a customer from waiting 3 to 4 days until the funds were available for them to trade. These funds are now available immediately for them to use. Another solution that is being used is payroll payments. We're seeing now a global trend of global workforce. It started before COVID, accelerated with COVID, where now most of you have employees in multiple jurisdictions across the world, and you need to send money into these employees. Originally, what you do is you'll build a payment file, you send it to your bank, and they will execute these payments, or you had to type it manually into your bank account. These are, again, very expensive transactions. They take time, and the employee expects to see exactly the amount that they were supposed to receive, and they want to see it on the first of the month. They don't want to see it on the third or the fourth or the 10th of the month. Using the Rapyd system, the employer will set up different wallets. They top up the wallets. They can top it up again in different currencies and then use the Rapyd solution to disperse these funds into the contractors. Another variation of this use case is where you set up wallets for the employees or the contractors, and they are essentially a bank account for the employee. So you actually top up these wallets of the subcontractors. You can issue virtual accounts, virtual credit cards or debit cards or physical debit cards on top of these accounts for the use of these employees. So you're not only paying them the salary, you're also enabling a bank account for these employees or contractors to receive money from you. As we see in this use case. Now, another solution that Eric explained earlier is that Rapyd, through the Rapyd wallet infrastructure and the Rapyd regulations across the world, enables our customers to offer services to their customers as a platform. Example here is a payroll company, and we have a couple of payroll companies as Rapyd customers here today. They provide payroll services to their customers. So instead of having their customers, which are employers, sending in money to this payroll company's bank account, and then this payroll company executes the payments, this payroll provider sets up different wallets for the different employers. Each employer tops up their own account with the payroll company. And again, this is immediate reconciliation, multi-currency solution, and then these funds are pushed out by the payroll company into the employee's bank account, again, over the local rails. Arik covered some of these use cases, so I'll skip this and just go down into how virtual accounts work. Again, as I said earlier, issuing a virtual account can be operated on the Rapyd client portal, a couple of clicks, and you can get any virtual account in any currency associated to your Rapyd account. You can virtually issue as many virtual accounts as needed. You just take this virtual account. In this case, it's an IBAN, but not in all countries it's an IBAN. IBAN is kind of more of a European virtual account. But you take this virtual account number, you provide it to your customers, and that's it. Now they can start using this either as a single-use virtual account or as a multiple-use virtual account. We can now see how this can happen in 20 seconds. If you can just run this video, please. And this is virtual account in action. You select the reference ID that you like, a country name, the currency. Description is optional. And you now have a virtual account. You want to add another virtual account in another currency. You select the currency, you select the country. And now you have two separate virtual accounts in your Rapyd client account. So this is all it takes to issue two bank accounts, different currencies, different countries in your Rapyd client portal. This is obviously supported by the API like all other Rapyd capabilities. In terms of reporting, we offer a set of default reports in the client portal, but like everything else on the Rapyd client portal, you can build your own reports, special purpose reports to meet your specific needs. These are available on the client portal. These are downloadable and enable you to immediately reconcile all the transactions. In terms of the countries where we currently operate the virtual accounts and the currencies, as you can see, we have a pretty nice global coverage in terms of countries across the different regions. Also across the different currencies, some virtual accounts offer a very large number of virtual accounts. Some are limited to local currency and US dollars. In addition to this, we will be releasing over the next few weeks another 3 or 4 virtual accounts in Poland, Luxembourg, Ireland, Canada, and potentially the US. So as you can see, this is rapidly expanding to provide virtual account coverage across the globe. But even today, we have a very large coverage of countries and currencies. So basically, if I need to summarize, the Rapyd virtual account, it's simple. As we can see, a couple of clicks, and you have as many as virtual accounts added into your Rapyd account. It's familiar to your customers. They pay in local currency, and you receive the funds in local currency and immediately can FX them as needed on your end. It's automatic. All the reconciliation is done by Essence because every transaction is associated with a virtual account and will show immediately in your client portal associated with the paying client, whether a B2B use case or a B2C use case. And it's end-to-end. You can add it in multiple use cases to enable multiple funds flow, either as a standalone Rapyd collect use case or as part of a top-up system for to enable Rapyd disperse, or as a general capability on a Rapyd wallet if you want to use it either as the Rapyd the business account or a consumer business account where you enable a business a virtual account that they can use to top up their individual wallet and use these funds on a card that you issue on the wallet. In terms of the resources, and again, all of the resources in Rapyd is well known for its very developer-friendly environment. So all of these resources available on the Rapyd docs, on the Rapyd YouTube channel, in the developer community. This is all supported on the Rapyd sandbox environment. So you can just log in, set up your account, and start issuing virtual accounts, testing this capability on the sandbox, either through the client portal and or through APIs. So again, all supported through the integration platform or the client portal. Any questions you have? This is a good time, or you can catch me or some of the other Rapyders here after the break. Thank you, and I think it's time for a short break.